The amount of inventory that we've seen.
The housing market in 2025. Are there signs of stabilization and opportunity, or is there a crash coming? The 2025 housing market stands at a crossroads with conflicting reports on an impending crash versus signs of stabilization. Homeowners and prospective buyers are left in uncertainty. Today, we'll discuss current landscape to provide clarity on where the market truly stands and the direction it seems to be heading. Where do we stand right now? As of March 2025, the housing market presents a really complex picture. So think about it for a moment. Nationally, the median existing home sale price in January was $396,960. Boy, that's a lot of money for the average home, right? That is a 4.8% increase over January of 2024. So we know that's a very, very high number, and it is a record setting number. The question is, will this thing stay the same and keep going up forever? Or is there a sign that things are going to change? One of the key things to suggest is that is an average number. Average meaning that there are going to be some wide stringing variations throughout the entire United States, particularly by region. And some of this information is starting to show up in the latest statistics and data. Here's a couple data points to suggest maybe things are changing. Inventory levels. The supply of unsold existing homes reached 1.18 million units in January. That's up 16.8% from the previous year, representing a 3.5-month supply. This remains below the 5 to 6 month typically indicative of the balanced market. That's according to Bankrate. Mortgage rates. The average 30-year fixed mortgage rate hovers around 6.5%, contributing to affordability challenges for many buyers. These figures suggest the market is in flux, with rising prices yet increasing inventory, a combination that could signal shifting dynamics ahead. So we know the current administration is not one to sit around and wait for things to happen. They are most definitely a proactive administration, and housing is definitely on their radar screen. Remember, President Trump himself made his billions in the real estate market. So, what's the current Trump administration doing today? Well, the Trump administration has enacted policies poised to reshape the housing landscape like significantly. A notable development is the appointment of William Pulte as head of the Federal Housing Financial Agency. Pulte has initiated a major overhaul of mortgage giants Fannie Mae and Freddie Mac, including the removal of several board members and senior executives. So it sounds as though he's trying to put this agency into a position where it's really going to be more streamlined when it comes to housing loans. These actions align with the administration's broader ambition to privatize these entities, potentially transferring them into a sovereign wealth fund. While proponents argue that this could reduce the government deficit and yield taxpayer returns, critics warn it may lead to higher mortgage rates and increased market instability. I don't know if that's really what's going to happen, but it gives us a little bit of insight of some of the other states of flux the housing market's in. However, there's more. Additionally, the administration's efforts to crack down on illegal migrants residing in public housing aim to relocate resources to eligible American citizens. I just don't think there's a lot of American citizens really looking for public housing. They're looking for a place to call home, I believe. So we'll see what those are right now. Signals of a buyer's market. For prospective buyers, the current market presents a mix of challenges and opportunities. High mortgage rates have tempered demand, leading to increased inventory. And the longer time a house sits on the market, there are more properties start to build up, and the more properties build up on the market, the more likely prices will come down. Here's a couple of insights. Price adjustments. Sellers are increasingly offering price reductions to attract buyers. In some regions, homes are selling below listing prices, often necessitating discounts to close deals. That's right from the Wall Street Journal. Negotiation and leverage is another place to consider. Buyers now possess greater negotiating power with the ability to request concessions such as covering closing costs or including home warranties. But let's face it, that's not happening nationwide. That's only happening in certain regional markets. Remember, it's essential for buyers to remain vigilant, right? The bottom line is you must pay attention to your particular regional market because those are the ones that really can have a wide ranging fluctuation. Opportunities exist, yes. Uh, Thorough due diligence and a clear understanding of local market conditions are paramount in this situation. Digging into regional variations, just understand that each region of the United States, whether it's the Northeast, the Southeast, the Midwest, the Plain States, the Southwest, or the Far West, there are going to be major fluctuations even within inside those regional markets. The housing market trajectory varies significantly across different regions, influenced by factors such as local economic conditions, migration patterns, and housing supply. Here's a couple things that I wanted to highlight for you. The Northeast and Midwest, some areas are witnessing rising home prices due to limited inventory and sustained demand. South and Southwest, these regions are experiencing price softening with homes remaining on the market longer and sellers more inclined to negotiate. That's according to the Business Insider. So, understanding these regional nuances is crucial for buyers and sellers to navigate markets effectively. And that's a super important thing to keep in mind. So, here are the expert projections right now in 2025, end of March. Looking ahead, expert projections for the housing market in 2025 suggest modest growth and stabilization. Some of the projections include home prices. Zillow forecasts a slight increase of 0.9% in home values over the next 12 months, indicating a cooling off from previous year's rapid appreciation. According to MarketWatch, sales volume, the National Association of Realtors anticipates a 6% rise in existing home sales in 2025, with a further 11% increase in 2026. So that would be maybe explosion of the pent-up housing demand that's really out there. Mortgage rates, another important thing to take into consideration. Expectations for rates to gradually decrease to around 6.4% by the end of 2025 offers some relief to buyers. And folks, I want to remind you that while mortgage rates have been like super low, lower than that, back in the day, we know that mortgage rates had been up to 13, 14% at one point of time. So these are still pretty historically reasonable mortgage rates, but not if you're in a bidding war for a house. Trust me, we get it on this channel. In conclusion, make sure you're hitting the like and subscribe button because I'm delivering valuable information right here to your inbox. And with that, we will update this theme consistently on a weekly, sometimes a bi weekly basis, depending on the information flow that's out there, delivering real, tangible information right to your inbox. Hit that like, hit that subscribe. And remember, ladies and gentlemen, the biggest battle we fight is the one between our ears. Have a great day.